Hello there. Welcome back to Cost and Management Accounting N6. Still looking at a question paper of November 2023. Today, I want to look at question 6 on that question paper that is on the preparation of cash budget. So this is the question that we have. And those who want to follow me on online classes, you can get hold of me on this number that we have here. So we can go to our question and try to see what we have. So what our question is question 6 on the question paper of November 2023. And the question reads, the following information was extracted from the records of Sunshine Production Limited for the last quarter of 2020. So we're given a table there that we are given for October, November, and December. And we get total purchases, direct labor, and overheads. So this is what we have. And then additional information, we've got total sales as follows. So we're given our total sales on additional information. So this is our total sales from July to December. And then we've got additional information that we are given 60% of sales on credit. So what does it mean? It means that of the total sales that we have, that is here, the 60% is on credit. And then the 40% means is on cash sales. So that is what we have. Then beneath that, we are given instructions in terms of how we are going to distribute the credit sales now. The first point is saying 45% of credit sales are collected within 30 days. It means sales of that month 45% of the credit sales of that month will be collected that month. That's what it means. The next point, 30% of credit sales are collected after 30 days. So what does it mean? It means, for example, uh, uh, the 30% of, let's say, the sales of July, or credit sales of July, will be collected in August. That's what it means. And then 20% of credit sales are collected after 60 days. It means after 2 months. So it means that the credit sales that we have for August collected in, say, September, first month, then October, second month. So they'll be collected the second month, that is October. So that's what it means. Then 5% of all credit sales are returned off as a bad debt. So it means of the credit sales, 5% are going to be retained as a credit loss or a bad debt. So it means if we calculate that, it's going to be a non-cash item because it's bad debts. Remember, bad debts is a non-cash item, or credit loss is a non-cash item. So we don't include it in a cash budget because in a cash budget, we are recording only actual movements of cash in and out of the business. So we are not going to record this. We are just going to ignore this 5% because it's not. It is a non-cash item. So if you go down, we are told that next point, all purchases on credit and full amount is paid in the amount after the purchase. So it means the all the purchases that we are given are on credit. So if you go up there, we see that let's try to see in terms of the amounts of purchases that we have. And then we are told that total purchases of September 2020 amounted to 480. So it means this purchase for September will be paid in October. So in October, we're going to have a 480,000 there. So this is what we have for total purchases that we have. We are given October, November, December. Then September is given in additional information. It means that one for September is going to be paid in October. The October one will be paid in November. November one will be paid in December. So this is what we have. We are just going to record it. We record it in the month that the actual cash was paid. So this is what we have. Then we have the next one, payment of direct labor is delayed by 1 month again. So what does it mean? Direct labor that we are given for October will be paid, for example, in the following month, which is in November. So we record it in November. The direct labor for September, we record it in November. For November, we record it in December. So this is what we have when the cash is actually paid. Then the overheads amount included a depreciation of 35% per month. What does it mean? Remember, depreciation is a non-cash item. Indeed, a cash budget, we only record cash items. So it means every month we are going to subtract 35,000 from the total of overheads that we are given for that month. Then we subtract 35,000. So if you go up there, you would see that for overheads, we have 120,000 here for October. So we are going to subtract 35,000 for November, 170 minus 35,000. Then for December, 210 minus 35,000. So this is what we have. And then we are going to the last point, the bank control account in the general ledger showed the credit opening balance of 158,000. So what does it mean? It means the opening balance that we are going to have in the first month, that is in October. Remember, we are going to prepare for the last quarter. For October, we are going to have an opening balance of 158,000. Remember, the net cash or deficit for that month, we are supposed to add the opening balance, then you get the closing balance. So this is what we have. So for the first part of the question, calculate the receipts from debtors for the last quarter of 2020 for Sunshine Production Limited. So if you go to our answer section, You see that this is our receipts from debtors. Remember, it's last quarter, in the quarter of the year was 3 months, so we've got 1, 2, 3 months in the last quarter of October, November, and December. So we are going to calculate the actual receipts for October and November and December when the cash was received. Then on the first column, we've got credit sales, where we subdivided that column into two, whereby we are going to have the first column listing the months and the credit sales. So we are going to have the total credit sales for August, for September, October, November, December. So we can go back there and see what we are going to do according to the information that we are given. But we are told that 60% of sales are credit. So it means 60%, if you express it as a decimal, it becomes 0.6. So it means we are going to multiply each and every by 0.6 to get the credit sales for that month. So here, if you come here, you'd see that if you go to our answer section, you would see that our credit sales column is starting from August. So we can go back and do a search. So we are saying for August, we are saying for August, basically we are saying we have got 980,000. 980,000, and the total 60% is on credit, so we're going to multiply by 0.6. So if you multiply that one, we get the credit sales for August, and then the credit sales for August there, if you calculate correctly, we are going to get 588. Let's just confirm there. We say 98, and then you multiply by 0.6. There we get 588,000. So it means we have got 588,000. And then we go to the next one now. Is September. September, we've got total sales of 1,050,000. So we're saying 1,050,000. Then you multiply by 0.6, and then the answer that you are getting there to get the credit sales for September, we're going to get 630,000. Then we go to October. For October, we are saying 1,210,000. 1,210,000. Obviously, you multiply by 0.6. What do you get to get your credit sales for October? You are going to get 726,000. So here we've got 726,000. Then obviously we have now November, where we're saying 1,350,000. And then you multiply by 0.6. If you multiply by 0.6, therefore we are on November, you're going to get 810,000. So here we've got 810,000. And then for December, we are going to say 1,540,000, and then you multiply by 0.6. So if you multiply by 0.6 for December, you get 924,000. So this is what we have. So we are just going to put our credit sales as this from August to December. So we can just go there and list that on credit sales. So what are we saying? We are saying for August, we got 528,000. So we're just going to put our 528,000. And then for September, we've got 630. So we're going to put 630,000. And then for October, 726,000. Then for November, we are getting 810. Then December, lastly, we have 924. We have 924,000. So this is what we have according to credit sales. So out of this credit sales now, that's when we got that apportionment that we are given there, that out of the credit sales that we've calculated, 45% of those figures are collected within 30 days, which means in that month. And then 30% after 30 days, it means the following month, that's when we receive the money for those sales. Then 20% are collected after 6 days, after 2 months. So that's what it means. So it means from year to year, where we've got bad debts, we should have 100%. It means of the credit sales, the 100% is going to be subdivided as such. So if you add this from year to year, we're supposed to get 100%, 45 plus 30 plus 20 plus 5%, to get 100%. Then, but this 5%, we're not going to record it since it's a non-cash item. So let's start with the first one, saying 45% of credit sales are collected within 30 days, which means the credit sales of that month, they are collected that month of 45%. So we go there. What we are going to do, we go there. Then we say for August, we are not going to consent for August because we are not having this section is the one that we are calculating for the receipts. We are calculating for October, November, December. So it means credit sales for October are going to be received in October, 35%. So basically, we go there. and try to see here we are having 45%, sorry, 45% of credit sales are closed within 30 days. So it means that month we've got 45%. So we come here. So we are saying for October being received in October. October credit sales being received in October. So we've got 726 times 0.45. Then we get your credit sales here. 0.45 times 726. Let's calculate that one. You get that is in the same month for October and October, we are going to get 326,700. Let's just try to confirm if it's correct. We are saying 0.45. Then we multiply by the October one, 726. Okay, 726,000. And then we are going to get 326,700. So it means here, October, 326,700. And then we go to November. Those ones for November that are going to be received in November again, 810,000, which are going to be received in November again. So 810,000 times 0.45. 810,000 times 0.45, we are going to get 364,500. So we are saying here 364,500. So this is what we have. Then for December, being received in December, we have 0.45 times 924,000. So we calculate that one, get 415,800. So 415,800. So this is what we have. Then we go to the next instruction in terms of this credit sales. We are told that 30% of credit sales are collected after 30 days. It means credit sales of this month that are going to be collected the next month are going to be 30%. So we go there and do such. Remember, we are concerned about this period, October to December. So what are we going to do there? We are going to say the credit sales for September will be received in October. So the percentage that we have there, let's recheck. The percentage is 30%. So we are going there. We are saying 30% of the sales of September will be received in October. September, October. So we're saying 30% of 630,000, say 0.3 times 630,000. Then the answer that we get there is 189,200. 189,000, it should be 189,000. Let's just confirm. We are saying 0.3, and then you multiply by 630,000. And then you get your, let's try to see. Get 189,000. So here it means we have got 189,000. Then we go there, we say 0.3. The ones for October, credit sales for October will be received in November. The 0.3. The October ones will be received in November. So it's going to come here. So it's saying 0.3 times 726,000. 0.3 times 726,000, you are going to get 217,800. 217,800. So this is what we have. And then it means for November again, will be now received in December. So what we are saying 0.3 times 810,000, then the answer will come here, November received in December. So we calculate that one, 0.3 times 810,000, we get 243,000. 243,000. So you are saying 243,000. So this is what we have in terms of the second instruction. Then we go to the last instruction that we have that we are going to include here. Is 20% of credit sales are collected after 60 days. So 20% is 0.2. So it means after 2 months. So what does it mean? It means the ones that we want to include for October, we go 2 months back. So the October is the first month here. So we go 2 months back, say 1, 2. So it means the 20% of the credit sales for August are the ones that are going to be received in October. So we say August, October. So we're saying 0.2 times 528,000, and then we are going to get 117,600. So here we have got 117,600. Then we go for September, credit sales for September received after 2 months. We say 1 to November. So we are saying this the 0.2 times 630, 0.2 times 630. Then what do we get there? We get 126,000. So we get 126,000. Then we go for October. The ones for October, 20% will be received in December. For October, we are saying October, we are saying 1, 2, then we received in December. Then we come here. in December. So what are we saying? We are saying now 726. We are saying 726 times 0.2, 726,000 times 0.2. Then we get, let's try to calculate that one. The ones for October that are going to be received in December. We are going to get 145,200. 145,200. We can just confirm that one. We are saying 0.2 times 726,000. And then we are getting 145,200. So that's what it means. Then this one for November, we said we are taking it from, this one is for November. We are taking it from September. We are saying 0.2 times 630, then we get 126,000. So this is what we have. So these are the amounts that we have. We are saying that we have got those allocations every 3 months. Then that 5%, we are going to ignore it since we are saying it's a non-cash item. So obviously now we have the total column that we are going to have here. Total, we are now calculating the total receipts. So it means here we are going to have the total receipts for October, November, and December. So if you add the first column, the total that you are supposed to get there, 633,300. You add the second column, the total that you are supposed to get, 708,300. Third column, you add, you're going to get 804,000. So this is what we have. So we now know that these are our total receipts. We are going to include them in the cash budget. Then we go to the next question. Let's try to see on the next question. The question now is on the cash budget. And remember, this cash budget is for October, November, and December, is we have presented there. This is what we have. So we are just going to start with the cash sales. Let's start with the cash sales. So here we are saying cash sales. We are starting with cash sales. So for cash sales, we are going to see what are the cash sales for October, for November, and December. So we go back there. We see that this is these are our credit sales. This is representing our credit sales. These are our credit sales. Remember, when we calculate, we're using 0.6, which is for credit. So cash is the remainder. If you say 100% minus 60%, you get 40%. So it means 40% is going to be our credit sales. So you can say 40% of the ones for October, the cash sales will be received that month. Which means the total sales for October will be received in October. That's the cash sales. So we are saying 0.4 times 1,210,000 to get the cash sales for October. So and then we do the same for November, and then we do the same for December. So basically what we are saying is, let's just try to illustrate it. We are saying here let's start with the first one, which is October. We're just concerned for cash sales, just take from the actual month for October, which is the first month. We are going to say 0.4, and then we multiply by 1,210,000. Is 1,210,000. Then you calculate it, we are going to get 484,000. Then we do the same for November. So for November, we are saying 0.4 again. You multiply by this total sales for November, 1,350,000. And then for November, the answer that you are getting there is 540,000. Then we go to the next one, try to see, which is now December. For December, we've got 1,440,000. For December, we are saying 0.4 times 1,540,000. And then obviously for December, the cash sales that we have, then it's going to be 616,000. So this is what we have in terms of cash sales. So we can go and just input those figures according to the months that are October, November, and December. So for cash sales for October, what we got there was 484,000. And then for November, the cash sales that we got there is 440,000. And then we go to December, we've got 616,000. So this is what we have in terms of cash sales. Then we also supposed to add receipts from debtors to get the total receipts. And the receipts from debtors is the figures that we got there on the collection schedule that we completed on top there. So this is what we have. So it means our receipts from debtors, we are going to take these figures. For October, we are going to take 633,300. For November, 708,300. Then for December, 804,000. So we go there. So we are saying for we go to October, the receipts that we got there was 633,300. And then for November, 708,300. Then for December, we have got 804,000. Then these are the receipts that we have. Then obviously we can add to get the, we can now add to get the total receipts. So here it means we are going to have our total receipts. So we're just going to say 484,000 plus 633,300, and then we are supposed to get 1,117,300. We add these two again, you are supposed to get 248,300. You add again these two, you're supposed to get 1,420,000. So this is what we have. Then after getting our total receipts, now we are going to the total payment section, whereby we are saying, so total payments is going to be here. Then we put our total payments here. But to calculate those total payments, we are going to have payments to creditors. Remember, those purchases are going to be representing these payments to creditors. So remember, we are saying the following month. So we go back there to see the instruction in terms of purchases. We are saying all purchases are on credit. Let's just try to bring it at the middle so that we see. It's saying all purchases are on credit and full amount is paid in the month after the purchase. The total purchase for September is 408. So this 480 is going to be paid in October. This was September, so it's going to be paid in October. So we record it in October. And then the ones for October will be paid in November. The one for November will be paid in December. So we are going to start with 480. This is for October. 480 is for October. And then we are seeing that 560 that we have for October will be paid in November. So we put it in November. The 650 for November, we're going to put it in December. So as such, that's what we are going to, how we are going to record it. So we go there. We are now saying, here, remember, we have for payment to creditors, we got 480. That is for September being paid in October. We are putting it in October to represent 480,000. Then the one that is for October is 560 and will be paid in November. And the November one, which is going to be paid in December, is 650. So as simple as that. Then also, we can go and check also, we have got the direct labor. So we have got direct labor, which is next. We can go there and check in terms of instruction on direct labor. So you just have to go to the instructions on additional information and just follow as such. So if you go down, you'd see that for direct labor is here. Payment of direct labor is delayed by 1 month. Direct labor for September 2020 is 400,000. It's delayed by 1 month, which means the September direct labor again will be paid in October. The October one, November 1, December, like what you did on purchases. So we can just go there. We are going to start with 400,000. That's for October. Then we go for the direct labor that we have there. So it means this 450 for October will be paid in November. This 500 will be paid in December. As simple as that. So we go there and enter as such. We are saying direct labor. So the direct labor that we have, that is for September being paid in for September being paid in October. We have 400,000. Then the one for September being paid in October, we have 560,000. Sorry, let's try to see 450,000. Then the November one being paid in December is 500,000. So we record it when it's paid. So this is what we have. Then obviously the last one we've got overheads. Then for overheads again, we need to see what instruction is there in terms of overheads. So you'd see that on overheads, we have got the overheads amount included depreciation of 35,000. So we are not told about when it's paid. So it means they are going to be paid that very month. But we are going to subtract 35,000 as a non-cash item and remain with cash items. So we are saying every month we subtract 35,000 since it's a non-cash items for overheads. So we are saying for October, we are going to say minus 35,000. For November, minus 35,000. And then for December, minus 35,000. Remember, this one is 35,000 that we are having here. We are saying minus 35,000. So we are just saying 120 minus 35,000, 170 minus 35,000, 210 minus 35,000. So let's try to calculate that one. 120 minus 120,000 minus 35,000. We are supposed to get 85,000. Then here 170,000 minus 5,000, we're going to get 135,000. Then 210,000 minus 35,000, you are going to get, let's try to see, you're going to get 175. 175,000. So these are the amount that we are going to put there, representing our overhead. So we go there. Overheads, we are saying the first one is 85,000. The second one is 135,000. And then the third one is 175,000. So this is exactly what we have. Then we now add we add all of them so that we get our total. We add all of them so that we get our total payments now. So if it's this one plus this one plus this one, the total that we are supposed to get there for total payments is 965,000. Then this one, we are going to add this one plus this one plus this one. The total that we get here, 1,145,000. And 650,000 plus 500,000 plus 175,000, you're going to get 1,325,000 in. So these are our total payments. Obviously, now we are going to subtract them there from our total receipts to get the net surplus or deficit. To get the net surplus or deficit. So let's try to calculate those figures. You'll see that in the first, which is November, the first one, sorry, is October. Here we are saying we are getting, this is 1,173,000, if I'm not mistaken. Let's just try to see 1,173,000, 1,117,300. Sorry, here is put 1,117,300. Then you subtract 965,000. Then the answer that you are supposed to get here, let's try to see. We are seeing that the receipts are greater than the payments. So obviously, we are going to get a surplus there of 152,300. And then if you say 1,248,300 minus 1,145,000, then the answer that you are going to get there is 103,300. And then for the last one, we are seeing that this one is greater again. This is greater than this one. You're saying 1,420,000 minus 1,325,000. Then the answer that you are supposed to get is 192,600. So these figures is net cash surplus, net surplus or a deficit. So if it's a deficit, we show it by putting brackets so that it's a negative figure. So in this case, we've seen that they are all positive, so we are going to leave them as such. So after that, now that's when we are going to add the opening bank balance. We are going to open the opening bank balance. So here we are saying opening bank balance. So on the opening bank balance, remember in the question we are given the opening one that we are going to start with. Says try to see down the question. So we are given the opening balance is 158,000 a year. 158,000. So this is the one that we are going to start with. So this 158,000, we are going to put it at there. 158,000. Let's try to see what this bank balance is saying. Right, the bank control account in the general ledger show the credit opening balance. We see now it's a credit opening balance. So remember, in the bank account, when it's a debit balance, it's supposed to be shown as a positive figure. But when it's a credit, we show it as a negative figure, because when it's a credit, it means it's a bank overdraft and it's a negative balance. So we need to show it as a negative figure. So this one is a credit, which means we're going to show it as a negative. So here, if you come here, you will see that 158,000 now is supposed to be in brackets, show that it's a negative. Then to get your closing balance, closing bank balance, the formula is just simple. We are just saying opening plus opening balance, you add closing balance. Sorry, opening balance, you add the net cash or cash. Let's try to present it there. Let's just say we are saying net balance plus opening balance, then you get the closing balance. So the net balance is this one, the net cash, net surplus or deficit. If it's a deficit, which means the net balance will be negative. But if it's a surplus like this, a positive, we show it as a positive. Then you add the opening balance. Then if the opening balance is a negative figure like this, it means also you are going to subtract. If it's a positive, you are going to add. Then you get your closing. So your closing again is going to indicate whether it's a positive or a negative, depending on the figures that we have. So let's start with the first one. We are saying 152,300 minus 158,000. Then obviously the figure that we are going to get is a negative one, which is negative 5,700. So here we're getting 5,700 as a negative. So this one again is going to be the opening for the following month. So here we are going to say 5,700 again, and we put it as a negative. So it's a negative again. So we're going to say 103,300 minus 5,700. Then we get 97,600. So this is what we have. So this one is a positive. So we leave it as a positive. Then this one is also going to be the opening for the following month. Here it's a positive figure. So we're saying 192,000. Let's try to see in terms of the last one. The last one, I think there's a mistake there. This figure. Let's try to verify this figure. We are saying, let's try to see. To get that figure, we said, you try to calculate that one. We said 1,420,000 minus 1,325,000. So we are just calculate such 1,420,000. And then you subtract 1,325,000. We get 95. So it means here we have got 95,000, which is a positive one. So we can just correct that, and then we move on to calculate the closing balance. So the closing balance, here we've got only positives. So we're going to say 95,000 plus 97,600. Then the answer that we are supposed to get is 192,600 as a positive. So this is what we have in terms of this cash budget. I think hopefully this video was very helpful. Those who haven't subscribed, please subscribe and share. We are still coming with more videos to assist us for the exams that are going to come. Those who want online classes, you can always connect me on the number that appeared at the beginning of the video. As for this video, I'm signing out.